So most prop firm traders blow their accounts, get mad at the market, and have no idea why they lost. So how do I know that? Because that was me before. So before we get started into understanding on how we can position ourselves in the market for the most profitable trades, welcome to Unc Brian TV. This is where I'm going to be journaling my trades and really just going through my trade recaps. And hopefully anybody that's viewing this, it's helpful to you. So without further ado, let's get started. First and foremost, I only trade one thing. Like, I think the crazy thing is how people look at so many charts and they're in NQ, they're in ES, and I can understand if you're doing those two because they kind of move similarly. But like, if you're looking at different things all over the place, like, just stop it. Like, if you want to be profitable, just focus in on one thing. And I've been in the trading game for about 4 or 5 years now, so that's just something that I learned. I used to have like a whole list of things on the side of my screen, just like, oh, let me check this, and really what it is that you are not focused on what the real move is, because if you catch the real move, you won't even need to take crazy trades all over the place. So but anyway, today I want to just go over the trades that I took and how they positioned me for profit today. So when I first come into the market in trading NQ, I come in at pre-market. So right here, I'm just going through my replay, and I look at it around, I'm on Central Time, but on Eastern Time, it'll be 8:30 is when I'll start kind of like looking at the market and seeing what's happening. But my first analysis, just so you can understand these lines and stuff like that, everything that's here is Asia session. This is what happened during London. And this is just an indicator. If you guys take a look at the ICT kill zones, that's anybody that's on TradingView, you can get that for free, but I let those create those lines for the sessions that I'm not trading. So when I come in, I have some context to where price is at, and then I just draw my own line. So I saw that on Monday that price took completely off. It was really, really, really bullish. And when I see a lot of blue candles like this, for me, I'm looking for where I got the first bearish candle printed at, and if price has come back into that level to retest it. So just based off of yesterday on the 15-minute chart, I could easily see that price did not come back into this area to check this wick. So I'm just drawing a line right here, right off the top. Okay. And this is on the 15-minute. I do trade down as low as the 15-second just for entries, FYI. But you can take a look at this on the 1 minute. So I'll come down to this, and this is what I was looking at pre-market. Price is sitting right there around the true day open. A little bit of sauce here, man. Like the true day open, it can be good for entries and for targets, just depending on how price action is going. So you want to be mindful of where that is and where price is relative to it at all times. So I just kind of like let the market open up a little bit and give me a range, and not get too greedy and trying to get taken out with these crazy candles, because sometimes like they'll print like these big candles, and when you see it move like that so fast, you'll be like, oh man, let me hurry up and get into the buy, when really that's what they're trying to trick you into doing. You know what I mean? So you have to have an idea of what move is actually about to play out. So the market opened at 8:30, kind of pushed up a little bit, and I'm just watching price. Obviously it's printing a little bit, not giving. So this is already giving me a little bit of sell vibes, because when price pushes off, it won't usually give you a chance to get a great entry on what the initial move was. So think about how great it would be for the buyers right here. Like, man, you saw a push off, and then you get back into this area, and now you get buys. Now they're kind of setting you up, because everybody would be trying to buy right here. And I have an idea and a theory just based off of reading price action on like how the candles actually print these imbalances like this. So I haven't found another way to refer to it, but when I see an imbalance that don't have like any like grip on it, like, cause I look at it kind of like a mountain, and a mountain kind of like goes up like this, this it just goes up and it's like no grip on it. And then I get the bearish candle right here. So I automatically know price has to come here. But because there's no grip in this area right here, then I know price is just going to come down and bleed. So I'm just watching and trying to see where I can get the best entry. Okay. So once I see it pull back, we kind of snatched this little liquidity right here. Here, let me zoom in a little bit, especially right here. Okay. You make these candles a little bit bigger for the screen. All right, cool. So I see that this wick right here rejected. Okay, so once I see that rejection there, I'm already kind of eyeing the trade, and you see how it just jumps up and then comes right back and closes in here. This is how you can identify the fake outs. So once I see this and this candle closing right here, I'm in it. Okay, and I have a criteria on how I take my trades. So you got to have a little bit of a system to keep a higher winning ratio. Like if you just keep on trying to take the trades and try and get the biggest profit and stuff like that, you're gonna lose more than you win, because price likes to balance itself out. So you really want to take the profits when they present themselves. And one of my rules is that I don't like to have more than a 50 tick, or if you convert that into points on NQ, it would be 12.5 points to 13 points. Sometimes a little bit looser on it, just depending on how I get it, but somewhere in that area. I want about 13 to 12 points as a stop loss. And that may sound crazy to some of y'all, but like I would rather be stopped out really fast and then recalibrate my position versus holding on to it and thinking that it's going to come back, because I'm telling you, like, it's never going to come back. It's going to blow your account, especially when you're working with these prop firms, because you got floating drawdown that's going against you. So you can't just be sitting there and draw down all day. Like, you don't want to do that. You want to take your profit when it presents itself. So for me, I at least want to aim to get a 4R profit, risk to reward, on my entries. So right here, as you can see, I took that entry and this one played out, and I was a little bit salty, and I'm getting better at this, but I'd rather this happen to me than anything. And that's, I'd rather get my profit and get the hell out, and then let it, sometimes it runs off because it pulled back a little bit, and then after that it bled. And this, actually, I was kind of happy that it did this, because now that I'm watching the price come down further and further and further. And another thing that I did, just my thesis on why I took profit at this area, once it came down here to this internal low, and that's how I want to do it. Like, I feel like this is a safe zone, that it will definitely come here. I've seen sometimes where it reject right here, and this will come all the way back up again. So I feel like a safe zone to collect my profit will be taking it off of this internal structure right here. So this is all pre-market though. So I'm looking at this, and this is before the 9:30 Eastern time open for NQ. So that's telling me, like, I like to get out the way before that 9:30 candle hits, because sometimes, like, again, I could be right and it wants to print bullish for the day, and the wick could come all the way up here and wipe you out, and then come back down and then play your whole move out. So it's like, I don't want to get stopped out. Like I said, I want to get out the way, and it gave me the opportunity to collect 5R before the market even opened. So this is like pre-market. So I'm happy about that. I would rather take this W and then go into the market with positive, money in my account, rather than trying to, question myself on whether or not I should have stayed in the trade and all of that stuff. Okay. So 9:30 hits, we get all of the volume flooding into the market, and then it just leaks. Okay. Now, like I told you before, when price is moving crazy, like back and forth, like really fast, and we're looking at this on the 1 minute. Okay. I'm trying to get better at keeping this in the middle so y'all can see this. Okay. So when price is moving really fast, like, it's not able to grab liquidity. So it's leaving open hella gaps, and price always seeks to balance itself. You know what I mean? It's kind of like a scale. So when you see these large imbalances, it usually means price is going to come back into those areas. So because of my first initial analysis, which was that we were going to be bullish and we needed to retest this level on the 15-minute, and it came back further. About how many? Let's see how much further we can. We overshot it by 80 points. So again, I don't want to be sitting in this trade right here trying to take it off of the open, trying to be all super cool. And just, oh man, I got the sniper entry. Nah, man, I want to take the safe entry. Okay. And I can already see right here that it's got wash through. I don't want to be 80 points in drawdown. That's way too much. You'll blow your account. Okay. So what I do here, I saw price came all the way down here and then settled. And because I already was bullish for today and I saw how it was setting everyone up for a bear trap, because just based off of how price was moving last week, I already know that people have it in their mind like, oh man, the market's about to fall, it's about to die. And I've seen too many of these days. It's going to set you up for a bear trap. And that means that it wants people to be in these sales right here and be bearish, so that in that way price can just grind all the way up and take everybody out and then finally print the high today. So that was just kind of like my thesis coming in based off of just this. So I get into the trade right here and then I take it. Again, it's a little bit of a wide one, but I was very confident. Like if I wanted to really kind of like draw it up and be tighter with it, I could, but I was already in profit and I had lowered my entry risk. So I have a standard amount that I go in with, but I will enter with larger stop losses just so that way I can lower, so I'm not getting hit for the full loss if I take it. All right. And then I can use that to kind of scale in if it's confirming based off of what I'm seeing with price action. So I take this entry and it does exactly what I thought it was going to do, which is chop, 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 chop. But once I got this pullback right here and it pushed back up above, so it collected this liquidity here, filled this gap and start pushing up a little bit more, it's just doing chop suey right here. And when I see chop suey, I hate sitting in these trades because, man, it take too long for the profit to hit, man. Like I want my TPs to get hit quick. So I took TP as soon as it crossed this internal liquidity right here and collected it right here. So I was safe in this trade. It wasn't the greatest R. Like I got 1.5 right here, and I was just cool with that because I had already collected 5 over here. But that being said, this trade right here was 142 points. NQ's been moving crazy lately, so I was thankful to get that. So that's 2 trades right there out the door, and I just let the rest of it. You see how it just pushes around, just grinding all of these sales up. So eventually, I already know it's gonna come up here and touch this, come back to the true day open. And like I mentioned earlier in the video, like true day open can be used as a target. And the way that you want to make it simple on yourself, if you're on the bottom side of the true day open and you want to be looking for buys to go here, and if you're on the top side, then you want to be looking for the sales to come back and touch it. Okay. And I'm going to show you in my next trade on how I use that again. So this is where I'm just not even trading. This is just taking too long. Now I could have held it, and eventually, like I already know, like if I would have held it to this next high right here that got created earlier, that would have been what, 3.5. So yes, I could have collected more profit there, but sorry, is it really worth it? Like to go through all of this time sitting in this trade for that long? For some people, yeah, but because I'm trading funded accounts where the drawdown is floating, I don't want to risk it. Like I want to get my profit and get my payouts, man, because that's how you keep the higher win rate and that's how you keep the money flowing in. Okay. That being said, I'm just watching it. I already know that price is going to try and close bullish on the day, just based off of how this price action is right here. Okay. It grinded us up. So I watch it, and then later on in the day, I was just like, okay, I'm going to wait until the PM session hits and see what we do after lunch. So after lunch, we get up here and I get like this little small internal break of structure. which gave me an idea, because I'm not going to take sales off of this first leg right here. Okay, you don't want to you don't want to take sales off this first leg. This first leg is dangerous because it could just bounce right here and just shoot completely up again, you know. So you want to be mindful about where you get these entries at. So I need to, if I'm going to take a sell, I want to be doing two things. I want to be taking out some type of internal liquidity, and I don't want a higher high to be created. So what does that mean? For me, this would be the high. So price can't come back up to here, because once it comes up here, then my sell thesis is invalid. Okay, you don't want to hold the trade once it crosses this line, because it can just go up however far, you know. So if it's gonna come back down, and like I said, I'm on the top side of this true day open, and I'm looking at the imbalance that was created right here at 12.18. The thing that I see right here is that there's no white candles in here. So again, this is how I identify imbalance. The furthest that it pulled back was here. So from here all the way to here. Some people call this a fair value gap. Again, to me, the mountain just don't have enough grip on it yet. So I feel like it's going to slip and come back into that area all over again to create some type of structure that's going to tell us what we're going to do next. But in order to do that, I needed to not create a higher high, and I need to collect the get like some type of liquidity sweep. So just based off of this price action right here, this is an order block on the 1 minute. So it's showing me where price ripped pretty hard to the downside. So I would at least want these sellers to get out, and then have my stop loss appropriately set. So I'm kind of watching that area. And another way that I identified it is that if I pull out my fib and I just go just like this, it's giving me the areas that I like to take, you know what I mean? So I'm not going to take it immediately, because it is kind of a tight trade. As soon as it gets into this area, it's going to get in here, and then I'm going to see what it does when it comes here. There is occasions where I will just take it right there off the 62 or right there off the 70. But because we're already kind of like moving pretty fast, I want to be conservative. And I already got 2 W's for today, so I'm not trying to take a L, you know what I mean? So I watch price play out. It's creating some internal liquidity. We get the push, and right there, like this is how it moves. So right here, it swept. This wick right here swept, and then printed to the downside with another engulfing candle. All right. So this is giving me sell vibes. So once I get back, I want to at least still take it off of where my original entry of like, or my best entry, what I feel is like the 705. So I'll take the entry there and put my stop loss right here. So you see I'm at like 16.2 right here, and this is just saying if price comes and tries to sweep this candle here, oh, I'm sorry, let me move this over for the if price comes over here and tries to sweep this candle out right here, then I already know like it's too bullish. It's nothing that's going to keep it from going up here. So because we got the sweep, this would then be like the sweep of this area right here. This would be the area where I'm looking at sales if I'm going to take them. And this is during the beginning of the PM session. So I take that and boom. See how this played out. All the way down. Okay. Now when I get into this area down here, like I told you that true day open was my target, and my initial thought is that if price crosses the true day open and I get a candle close on the other side of that true day open, I'm holding that trade until it comes back to break even, because to me it's telling me that it's a high probability that price is going to continue to go down and fill all of those gaps that was created in this area, you know, because price has got to come back down into these areas, in my opinion, and down in these areas. So if it does that today and I get the candle close, then I'll hold on to it. Other than that, I should take profit. And right now, Like I had it drawn up for the 5R. Like this would have been, this is where I took my initial profits at. I just took some partials and kept 50% open and just let it run. But we'll show you how this played out. It went down there, but you see it didn't cross that true day open. And because I didn't get the candle close there and then I got an immediate push back up to the upside, I was out of the trade. That's good enough for me. So I got 5R, and then 1. So that's 11R today with no losses taken, clean. And I did not sit and draw down for any amount of time at all. Like these are 1 minute candles. Like I was in like drawdown for maybe like a couple minutes here, and that's it. So any of you that are trading funded accounts and you're sitting in drawdown for 15, 20, 30 minutes, you're insane. I will just tell you straight up, you are insane. Don't do that, okay? That being said, I collected my profit and then I let price do what it did. And then if you watch what it did for the rest of the day, we could just play it all out. It came back and reversed the whole entire thing and kept on going bullish to touch this trend line for the day because it wanted to close bullish. We got some buyers in the market. So again, that's how I got my trades for today. Took 3 really clean trades. I like the way I was disciplined today. Didn't take any L's, didn't get risky, didn't do anything dumb to try and pass an account in one day. And that type of stuff, man. Like if you're trading with any of the prop firms that you see here on my screen, man, like this is how you should definitely consider trading if you're not already. You know what I mean? This gives you the highest probability to collect wins, collect profits, and remain profitable. So we've been going for a little bit. I think that's enough for the first one today. I hope this video was helpful to y'all. Like again, this is kind of like my trade journal where I can go back and look at the trades that I've been taking. But hopefully anybody that's taking a look at this, that is helpful to you if you're on your trading journey. So with that being said, I'll holler at y'all later. Peace.